Welcome to our second conversation with Udi. Today's chat, we are diving into one of the most popular topics right now, AI. Open finance provides a fertile ground for AI models to harness vast amounts of financial data. But how can AI be applied to financial data? Where is the market heading, and how are the financial institutions leveraging these technologies? These and other questions are what we want to address with Udi, a leader and innovator in this space. Let's get started, and thanks for joining today. The combination of open finance and AI is emerging as a pivotal driver for financial innovation and inclusion in Latin America. But how do you see AI shaping the future of the financial industry for financial data and A2A payments?
So the use of AI in financial ecosystem today has actually been addressed by removing a lot of human in the loop processes that are required for financial services. If you look around and if you check how companies or how financial companies are using AI, it's mostly about automating support, about automating human analytics, etc. And that is a pretty clear use of AI, and we are benefiting from all the work that companies like OpenAI are doing so that we can process efficiently text, images, videos to support our end users. I think there's a bigger question when it comes to financial AI, right? So we are really leveraging AI very similarly versus other industries. If you think about the insurance industry, healthcare industry, I mean, they all have similar processes and they can all benefit AI in the same way. What is pretty unique for financial AI is actually how do we use this data to make better decisions or to provide better services. And that's actually something where I believe there hasn't been a lot of advancement on AI over the last couple of years if we compare to other use cases. The reason is financial data is pretty well structured. So when you have to build a financial model, an underwriting model, for example, to approve or deny loans, the data that you have at hand is pretty well structured. And humans can create models that today are very efficient and they already work. So I would say in financial AI has been built for many, many years already, and these models work really well. There's an increasing complexity that is happening today thanks to the availability of more data. So if before building a model would imply understanding tens of variables from a user, today financial companies sit on top of thousands of variables that need to be understood. And each type of model that you have to build, an underwriting model, a user segmentation model, they all need to be generated from scratch. That means that building new financial models is going to take longer and longer if we need to rely on humans building all the features that are going to be populated into models. What really excites me about financial AI is how are we going to use this technology? How are we going to build the foundational models so that these type of use cases can be fully automated? And that can really change how we build the financial models. And to me, that's the difference between using AI in financial services versus creating AI in financial services. That's where I think the industry is going at the moment. And thanks to open finance and thanks to other solutions that are increasingly allowing companies to process, well, to gather more data, we're going to have harder requirements or harder times to actually process this information and create models. So unless we start building the foundations of the financial AI, I think we are not going to see the benefits on existing financial models such as underwriting models, user segmentation, marketing campaigns, etc.
What are the use cases? Could you share some real examples and how these new models will impact the end user life?
Sure. So I mean, if we go back to the division of how we use AI or how do we generate AI, we can find different use cases, right? So on the use of AI, we mentioned this a bit. To me, it is about leveraging AI in order to reduce times to support your clients and reduce times to process tons of documentation and the steps that require a human in the loop. And that is something that can save a lot of time, that can increase productivity in the financial industry. And we've already seen that in cases like Klarna and other companies leveraging this type of technology. On the other hand, when we look at creating AI, I mean, the use cases are the traditional cases where we have seen already machine learning models be successful, which is underwriting models, marketing campaigns for new users, user segmentations to offer them with new products, etc. So the capabilities that we can have are gigantic. I think the question here is, how do we move from generating unique models for unique use cases that are going to take more and more time to being built because we have a lot more data, to models that can be built on the fly for whatever use case we want in a common way. And to me, that is what is the piece that is missing today in financial AI. And that's where actually us at Belvo, we're investing quite a lot of resources on pioneering in this development.
And what are the technical challenges in applying AI to financial data?
The first one we're applying and creating AI is the first challenge is access to data. If you think about how a model like how the ChatGPT model is created, the input data that is required is basically the internet. And access to this data, I'm not going to say it's easy to access, but it's available to anyone. Financial data is not. Financial data is proprietary, it's private data, it's held by some institutions, so it's not a commodity. So the first challenge is, how do you access data? And here you find two different companies that have access to financial data, are the companies like banks and our companies like open finance companies like us. The second challenge to me is, I mean, how do you understand this data? And up until today, the financial data has been structured by the companies that had access to this information. So in this case, banks, and they have built their own data structures, and they have really understood their own data because that's what they have been processing for decades and decades. So that hasn't been a problem for them up until recently, where they are able, and everyone is able, to access other sources of data. So combining new data sources that you're not familiar with requires a lot of understanding. That is a second challenge. And now the third one to me is, how do we move from building models that use, I mean, tens of variables or hundreds of variables to models that use thousands or tens of thousands of variables? That is another challenge, because it's not going to be computationally doable to build all these models every time without a change in the way we approach this problem. And we need to remove human in the loop that today is required for all the feature engineering processes that is doable today with the amount of data that companies used to have, to where we're saying today where it's actually not really doable. And then to me, the last challenge, more than the challenge in applying AI to financial data, is in how do we actually democratize the access to financial AI. And here it is pretty commonly known that because the institutions that had access to data are banks, they are going to be building the models for themselves, which makes a ton of sense. They want to increase their margins, they want to increase their revenues, but that is their secret sauce, and they're not going to share it with anyone. Now, how do we democratize access to this technology? That is another challenge. And we believe that companies like Belvo and open finance companies can play a significant role here because we are uniquely equipped with access to data, with a deep understanding of these new data sources, and with the talent that is needed to build this type of technology.
What is the role of a company like Belvo in building AI for the future of financial data and payments?
It's that's a great question, and I think we need to play quite a lot of roles in this in this new era. I would focus on a couple that I think are super important. I mean, as I've been saying, there is a big need for players to build these foundational models in order to be able to create new financial models that are going to serve dozens of use cases. This technology needs to be built by companies who have access to data and who are willing to share this technology. To me, that is a key role that only companies like us can play. And then to me, the second one is we need to educate the market and we need to help all the consumers of new financial data to really understand it, structure it, organize it, and use it wisely. One of the key problems on any AI problem or any AI endeavor is how do you structure and how do you understand the data? That is the biggest challenge. The models behind are known and they can be used, but the expertise on the data is fundamental. And I can tell you that it's extremely hard because it's not only about understanding what data means, it's about understanding the caveats of the data, the edge cases, the things that can go wrong, the things that can be missing. What does that mean, etc. That deep understanding is something that we at Belvo need to provide to our clients because that is what we live out from. So, I mean, our bread and butter is opening the access to this information. And obviously, our clients rely on us to understand and process data efficiently. So we have this understanding, educating the market and educating all the players in the ecosystem so that we can all make the most out of this data is, to me, the second key role that we need to play.
Thank you so much for your time today, Uri, and nice talking to you.
Thank you very much.